Hi guys. Today we will analyze Ternium stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Compared to the overall market, Ternium is an average performer. There are some doubts in the very recent evolution. The short-term trend is neutral. The long-term trend is neutral. Not much exciting going on here. Support levels are around $38 and $36. The next support level is around $33. Resistance level is around $47. The next resistance level is around $57. In the last month the stock has been trading between $37 and $47 range. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.9 million. This is not a very liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth. Even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Before we start calculating the intrinsic value, let's take a look at analysts' forecasts. Ternium is expected to show a negative growth in revenue. In the coming 5 years, the revenue will decrease by -10% yearly. The earnings per share is expected to decrease by -40% on average over the next 5 years. This is bad. Why it's so bad? What is wrong with the company? The steel industry is known for being cyclical. As you can see below, the stock was a good performer only in 2008, 2010, 2011, 2014, 2018 and 2021, basically, every 3-4 years on average, and as you can see below, the stock was a bad performer in other years. And finally, let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 22% per year, for last 5 years. We see that the average profit margin of the stock has been around 12% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 79% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Ternium Company: awful, bad, and neutral. First scenario. Ternium will have awful performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be awful, -10%. Future profit margin would be low, 6%. Future free cash flow to net income rate would be low, 50%. In this case, the fair value of the stock today would be $24. Second scenario. Ternium will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be bad, -5%. Future profit margin would be average, 9%. Future free cash flow to net income rate would be average, 65%. In this case, the fair value of the stock today would be $48. Third scenario. Ternium will have neutral performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be neutral, 0%. Future profit margin would be high, 11%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $85. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 19.49. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Ternium, analysts forecast growth rate around -10% per year in next 5 years, and future PE around 5. Again, I will use 3 different scenarios for Ternium Company: awful, bad, and neutral. First scenario. Ternium will have awful performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be awful, -10%. Future PE would be low, 3. In this case, the fair value of the stock today would be $8. Second scenario. Ternium will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be bad, -5%. Future PE would be average, 4. In this case, the fair value of the stock today would be $18. Third scenario. Ternium will have neutral performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be neutral, 0%. Future PE would be high, 5. In this case, the fair value of the stock today would be $35. As you can see, today the stock is overvalued, $45, even if we expect the company's high performance in future. It's a highly cyclical stock. Based on the negative expected growth in the next 5 years, I would say the stock is currently overpriced. The stock is highly speculative at the moment. Can the stock rise in 2022? Maybe. Can the stock fall in 2022? Sure, it can. I don't think I can get a good return on the stock in the next 1-2 years. So, I wouldn't touch the stock until 2024. The stock will probably be okay in 3-5 years. I just don't want to hold the stock all these years. To me, it's about capital allocation and opportunity cost. Company's strengths. Ternium is a manufacturer of flat and long steel products with production centers in Argentina, Brazil, Mexico, Guatemala, Colombia, and the U.S. It is the leading steel company in Latin America with highly integrated processes to manufacture steel and value-added products. Successful track record of integrating complementary firms through mergers and acquisition. It has successfully integrated number of technology companies in the past few years to streamline its operations and to build a reliable supply chain. Automation of activities brought consistency of quality to Ternium products, and has enabled the company to scale up and scale down based on the demand conditions in the market. The company has a strong balance sheet. Its debt is well covered by operating cash flow. Its short-term assets exceed its short and long-term liabilities. Ternium has a return on assets of 22% and return on equity of 36%. This is amongst the best returns in the industry. With a yearly dividend yield of 5.68%, Ternium is a good candidate for dividend investing. Risks. The steel industry is known for being cyclical and reflective of overall market conditions. Demand increases during economic booms and plummets during global recessions. The probability of a recession in 2022 and 2023 is 30%. So, it can be tough times for the industry. Ternium is expected to show a negative growth in revenue and earnings per share. Limited success outside core business. Even though Ternium is one of the leading organizations in its industry, it has faced challenges in moving to other product segments. New environment regulations under Paris Agreement could be a threat to certain existing product categories. Liability laws in different countries are different, and Ternium may be exposed to various liability claims given change in policies in those markets. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.